Now on to one issue that has been a concern to many employees in South Africa. Remember that on the 1st of this month marked what has become known as a Tea Day. Thus, after the long-awaited tax reforms became a reality in the retirement industry and for retirement fund members. Essentially, the amendments will facilitate better tax alignment across pension, provident or retirement annuity funds. However, there has been some uncertainty amongst retirement fund members about exactly how their retirement savings will be impacted by these new rules. Now, to clarify this and other issues, we are joined by Romeo Msipha of Old Mutual Corporate Consultants. A very good morning to you and thank you very much for your time.
Good morning, Tito.
Now, first, let us look at, there's a number here that appears, 27.5%. What does the number mean?
It's basically the allowable tax deductible that members can make towards their retirement funds. You would remember that on retirement annuities, you could only, the allowable tax deductible was about up to 15%. It has been increased to 27.5% now, but it's also subject to a maximum of 350,000 rand per annum. So members in their retirement funds can contribute up to 27.5%. Generally, retirement funds have prescribed minimum contributions, which in most cases will be 7.5 member, 7.5 employer, which combined will be about 14%. But that members can now take that up to 27.5%.
Now, this changes, Romeo. What exactly do they entail? I know there's been a lot of fear amongst employees lately. What do they mean? I
think, just to clarify issues, what becomes effective now, 1st of March 2016, is that allowable tax deduction of 27.5%, which is also, as I said, subject to 350,000 per annum. But over and above that, the employer contributions would now be deemed as fringe benefit tax in the members' hands. The third issue that comes into play is the minimum threshold, which in the industry is referred to as the de minimis amount. Pension fund members at retirement, you expected to purchase an annuity. And before that, if your benefit was over 75,000, you would automatically be forced to purchase an annuity. Now that has been moved, that has been increased by government to 247,500 rand. So what that means is basically that if your benefit is over 247, then you only then would be forced to purchase a pension. But before, you would only have to purchase a pension if it was over 75,000.
Now, we've seen a lot of people resigning prior to this implementation of these new laws. It goes back to the issue of education. Can we really say that people do understand what these laws entail?
I agree with you. It was purely based on lack of education. You will find that bulk of people that are resigning were in actual fact not affected by this because they're pension fund members. Pension fund members have always been expected to purchase a pension at retirement. However, provident fund members did not have to purchase a pension at retirement. You would have to cash that, or if you decide to purchase a pension, purchase a pension, you were allowed to do that. Now, pension fund members were expected to take 1/3 of their lump sum, and 2/3 is used to purchase a pension. So what then is going to happen now for provident fund members? That which was supposed to come into effect 1st of March 2016 has been moved to 1st of March 2018. So for pension fund members, things still remain the same. For provident fund members, it means they still be able to take 100% cash, which we don't encourage people to do, by the way. It's always important that members, because with the life expectancy now higher, people tend to live longer. So we encourage people to use these vehicles of retirement funds as savings because they would tend to live longer. So to avoid having to rely on government for pension, we encourage people to use that money to purchase a pension.
Well, we're going to have to leave it right there, but thank you very much. That's Romeo Msipha of Old Mutual Corporate Consultants, basically saying that there's no reason to start panicking in terms of the new tax law reforms. Now,